There is no income limitations to convert. There is no dollar figure that's limit to convert. So if you want to convert $1 million, you can. This question came in from Nancy from Wisconsin again. Nancy writes us every week, it seems like now. Or maybe there's a Nancy that
maybe there's a few of them.
Well, I guess Nancy's a pretty common name in Wisconsin.
Probably more than one Nancy in Wisconsin.
Probably. Hi, Joe. Now, in the Great and Powerful Andi.
Wow. Thanks, Nancy.
Regarding podcast 391. Remember that one?
Yeah, 23 minutes in.
It was so good.
That seemed like just yesterday.
Oh, what a great show that was. 32-year-old Mike said he made his Roth $6,000 contribution through a backdoor conversion. Maybe I'm off base here, but I wonder if there is some confusion related to the conversion in contribution terms. His income for a contribution was too high for a direct Roth contribution. However, if he is converting to a Roth IRA, that's a different story. And he should not mark it on his taxes as a contribution because it's a conversion. The $6,000 limit is also for a contribution, but not a conversion. For Mike's sake, in case there's confusion on the terminology, can you explain the difference between Roth contributions and their limits, income and contributions, compared to a Roth conversion with limits, income, conversion, not contribution? Thanks, Nancy. Nancy, I believe if I could just go back in time to podcast 391.
You remember that, right?
22 minutes in 54 seconds.
Yeah.
I want to imagine that 32-year-old Mike was doing a backdoor Roth contribution.
Right.
Is what the terminology is. The mega backdoor, the Megatron, the barn door, backyard, whatever. It's a conversion.
Yeah.
But he's making a contribution to a non-deductible IRA.
Correct.
And then he's converting the non-deductible IRA to a Roth.
Yeah, and people just seem to call that backdoor Roth contribution. I mean, that's just what it's called, but it's two different things.
So he is making a contribution to a IRA. He's not making a contribution to a Roth IRA. He is not allowed to take a contribution to a Roth IRA because he doesn't qualify because there's income limits. As a single taxpayer, the income limit is
$129,000 is where that starts phasing out.
So 130 grand. So if you have more than $130,000, then you can you're phased out. What's the top? The 140?
The top is 144. So in other words, if you make, as a single person, if you make more than $144,000 of income, not taxable income, of income, right? Then you're phased out of being able to make a direct contribution to a Roth. Otherwise, you could do $6,000 if your income is below 129. You could do a $6,000 contribution directly to a Roth, and $7,000 if you're 50 and older.
And if you're married,
if you're married, the phase out starts at $204,000 and goes to $214,000.
Okay. So that's income limitations for Roth IRA contributions. What Mike was doing is he was still making a contribution. So he can still make the $6,000 contribution or $7,000 contribution, but he's not going Roth. He is going into an IRA.
And that's allowed to anybody, regardless of income level, as long as you have earned income.
Right. So
or if your spouse has earned income, you can use that too.
Perfect. So he's making an IRA contribution of $6,000.
Right.
And then what is he doing after he makes that contribution is converting that contribution into a Roth IRA. There is no income limitations to convert. There is no dollar figure that's limit to convert. So if you want to convert $1 million, you can. If you make $1 million, you could still convert $1 million if you want to. You're just going to pay the tax on whatever you convert. In this scenario, he already paid the tax on the contribution because it was an after-tax contribution because he was not allowed to take the deduction.
Right.
So he paid the tax, made an after-tax contribution, and then turns around and converts it into a Roth. there is no tax on the conversion, and it's just called a backdoor Roth contribution. But
Right.
it is a contribution and a conversion in the same, I guess, sequence or same strategy.
And it's just a workaround for avoiding those income limitations. And it's the same net effect. You get that $6,000 into the Roth IRA. It's just a two-step process, right? Realize, though, if you have other IRAs, doesn't work so well because you got to treat all your IRAs as one. And now when you convert, you're going to have some of it is taxable and some non-taxable, depending upon the ratio of that $6,000 to everything else you have in the IRAs.
Yeah, the pro rata and aggregation rules. So
Yeah,
I
and-
think we
yeah.
were just talking with Mike on podcast 391
Yeah.
that he did not have any other IRAs.
Yeah. The other weird thing is 401ks do not count in that computation, nor does a 403b,
Or
TSP.
Yep.
right? So it's only IRAs that count, and inherited IRAs do not count either. That's a separate type of account.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.